guys. Just want to talk about US interest rates and where they're going, as that's having a clear effect on the dollar. So last week we saw BOE and ECB and the Fed all come out rather dovishly. They did raise rates, which is hawkish, but then they said, they kind of sat on the fence about where rates were going to go further on. Now, it's long been said by the members of the US Fed that they will raise rates and keep them up for longer than expected until inflation is under control. They're not going to repeat what happened in the 80s, which is when inflation started to tick off. They dropped rates rather than wait for inflation to. So what happened in the 80s is that inflation did come off, and so they started to lower interest rates along with it, but then inflation didn't get back down to where it was supposed to and took off again because of the drop in rates. Now that is not going to happen again, or the Fed has said they don't want to repeat that, so they'll leave rates up here until inflation is back down to that 2% band. So market's getting a bit ahead of itself, thinking that interest rates are going to be cut later this year. Then on Friday we had the US jobs numbers, which was hugely inflationary because they were added a massive 500,000 jobs, right? So that's inflationary. So then the markets had to stop and think and went, well, perhaps we're not going to get an interest rate cut this year, and that carried on Monday. So that was Friday night, and then on Monday that theme is carried on, and that's being reflected in the US dollar, which you can clearly see if we go and have a look at the US dollar. Big moves on it over the last couple of sessions, a big kind of reversal of that trend. Now, particularly you can see it here against the yen. Now, is it a bullish dollar? Well, yes, you would think it would be a bullish dollar scenario, purely on the back of that. You've got the stock market way out of line compared to where interest rates are heading. So here we can see rate hike odds for the next three meetings are soared. March is locked in at 25 basis, May 75, and June even a 40% chance of 25 hike. So no chance of a cut. But it's this chart here. So we can see that five-year yield inverted has been moving off, over the last couple of sessions in a big way, and stocks haven't gone with it. So that needs to catch up. And if that's the case, then you'll see the US dollar safe haven flow as well. So I think in terms of, if we're going to have a look at the US dollar index itself, this downtrend that it is in this little channel will be broken, and we're going to start seeing moves to this direction. Overextended at the moment on the hourly chart, also on the 4 hour, getting that way on the daily, so expect a little bit of retracement, and that'll be the opportunity to look to get long US dollar.